Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is October 9, 2023. It is Monday. It is a semi-holiday in the U.S. Today with the Columbus Day holiday. That means the U.S. bond market is closed and also government offices, so there's no economic data coming out of the U.S. We do have employment trends, I guess, as an independent release. It's going to be released at 10 a.m. Speaking of employment, we did have the U.S. jobs report come out Friday. Non-farm payroll was much higher than expectations, but the unemployment rate was steady, and so was the average hourly earnings a little bit lower than expectations. That sort of balance each other out, at least in the eyes of the market traders. There is a 25 basis point chance of a hike at the next Fed meeting, which isn't that much. We do have some Fed speakers out here today, but of course over the weekend we did have violence in Israel, which is in a war state there, and that is causing a rise in the U.S. dollar. We're also seeing gold prices higher, and the U.S. stocks are down on the news as well. So in this Kickstart video, I always look at the three major currency pairs, but only from a technical perspective. The euro versus U.S. dollar, the dollar versus yen, and the sterling versus U.S. dollar. So let's see what all the news and that's out there, all the layers of news that is out there is having on the impact of those currency pairs from a technical perspective. So let's get started. Taking a look at the euro versus U.S. dollar on the hourly chart. The price is lower euro versus U.S. dollar means a higher. A lower euro U.S. dollar means a higher U.S. dollar, lower euro, and that move to the downside is taking the price back toward our 100-hour moving average. That's a blue line in this chart. It currently comes in at 1.0518, and you can see that the low price in trading here today stayed just above that level. We did move below the 200-hour moving average, and we're trading above and below it, as you can see over the last 5 or 6 or so hours of trading, and that moving average comes in at 1.052779. These two moving averages will be our barometer for more bullish above, more bearish below. If the price is currently trading right below the higher of those levels, and it's still, there still may be some uncertainty, even if the price does move a little bit above it, like it did here. But what traders will be looking for if the price were to rebound back to the upside is probably a move above this swing area through here, which is accompanied or comes in between 1.0551 and 1.0557. You can see the number of different swing lows and highs through here. Then we found some resistance here and support here, here, and here, and here, and here before breaking to the downside here. Then we came back up to this resistance here and here, traded higher, and you can see, you get the idea here where the price is traded above and below this area right through here. So if the buyers are going to take more control, we need to get above this area right through here. Conversely, if the sellers are going to take more control, we need to get below the 100-hour moving average to stay below it. During Friday's trade, the price did move below that level after the U.S. jobs report, immediately after, as a matter of fact, but found support down here at 1.0483. What's the importance of that level? In addition to it being a swing area over here on the hourly chart, you can see where it is either support or resistance for this yellow area right here with the low at 1.0483. But if you go to the daily chart and you look at the this low of this swing area here, you can see how it was an important low of the swing area through here. In fact, right there, here, all these different lows came in right around the 1.0483, and that's where the price bottomed on Friday. Last week, we did move below that area on 2 separate days, Monday and Tuesday, but could not sustain the momentum, so the sellers had a shot, and the next time the price came down to that level, the buyers stepped in. So going forward, going back to the hourly chart, if the price were to move below that 104.83 level right through here, that would increase the bearish bias. But first things first, we need to get below the 100-hour moving average to increase the bearish bias. Let's take a look at the dollar versus yen next. And this currency pair is, we actually moved a little bit lower here, not dollar buying in the this currency pair, but from the Friday's close, we moved in between the 100 and 200-hour moving averages, and we've been staying sideways ever since. The 200-hour moving average currently comes in at 149.23. The 100-hour moving average is moving lower and comes in at 148.99. Let's call it 149. We're currently trading at 149.10. So narrow trading range. in trading here today. But these two moving averages will be our barometer for more bullish above, more bearish below. Price moves above the 200-hour moving average, more bullish, and we look toward this swing area up here around the 149.40, let's call it 50 area. On the downside, if we break below the 100-hour moving average, we look toward the 50% midpoint. That's of the move up from this low right here, going back to September 21 to the high price that we saw in last week's trading. Recall last week we did have the JOLTS job data come out stronger than expected, force the price above the 150 level. That's this level near this area right through here, up to 150.15. And then we had this big sharp move to the downside. It took the price all the way down to the September 21 low right here, where we found sharp buyers, and the 50% retracement level was a key support through here, and then we traded above and below it here before moving higher on Thursday and away from that level. So go below the 100-hour moving average, look toward the 50% retracement down here as another support level for the dollar versus yen. So right now, neutral though in the dollar versus yen in between the 100 and 200-hour moving averages. Finally, let's take a look at the sterling versus US dollar. And like the euro versus US dollar, this currency pair is lower in trading here today. That move to the downside has taken the price to the near converged 100 and 200-hour moving averages, blue and green line in this chart. We did not, whereas the euro versus US dollar fell below the higher 200-hour moving average, but held support against the 100. In this case, we were finding support ahead of those moving averages, also near this swing area through here. It comes between 120.159 and 121.67. Number of different swing lows and highs through here that define this area going back in time, and lo and behold, the price stalled within that area and trading here today just above the 100 and 200-hour moving average. So guess what? You need to get below this yellow area. You need to get below the 100 and 200-hour moving averages to increase the bearish bias. Right now, we are finding support buyers against that level, but we're not exactly racing to the upside. But nevertheless, buyers are trying to make a play against that level. If they are successful, and we do see further corrective moves back to the upside, taking out the dollar buying and trading here today, we look toward this swing area right here between the 122.19 and 122.31. That's the 38.2% retracement of this move, of this trend move to the downside. Recall that if the buyers are going to make a play on a corrective move, they need to get and stay above the 38.2% retracement. Unfortunately, the news this weekend could not sustain that break above the 38.2, so we're back down below that level. So there you have it, a look at some of the fundamental news that is driving the market, also some of the technicals that are driving the three major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.